Hello friends. Friends, we will continue with cash flow statement. We'll continue with cash flow statement. And in the last lecture, we started with cash flow from financing activities. Right? Cash flow from financing activities. Now, I told you what are financing activities. The activities that are directly affecting our finance, those are financing activities. We are in need of finance, or we can say we are in need of money. So there are three ways in which we can take money from outside. One is share capital. Other one is debentures. And the third one is loan from bank. Clear? Now if we are taking money, this share capital and debentures we are taking from outside. That is, we are taking from public, and loan we are taking from bank. Now this you know that when we take loan from bank, they charge interest on that. Right? They charge interest. Clear? Similarly, on the share capital and debentures, this we are taking from the public, and this is not free of cost. Public money is not free of cost. You have to pay them something, right? So in case of share capital, what we pay is interim dividend, that is dividend paid during the year, and final dividend. Clear? In case of debentures, what we pay is interest. Clear? Now, we have to repay these loans also. What are the repayments called? This is loan from bank, repayment of loan. This is what we say. We have to pay back the loan to the bank. Clear? In case of debentures, we call it as redemption of debentures. We are calling back our documents from the public, and we are paying back their money to them. This is, we call it as redemption of preference shares and buyback of equity shares. Right? What is equity share? It is a document, right? It is like a receipt for the amount that we have taken from public. Right? Now we are buying back that document and we are paying money back to public. So this is the whole flow of financing activities. Now can you tell me, this is where we are issuing. This issue is cash inflow, right? And expense on these, we have to pay some amount to the public or to the bank. This is our cash outflow. Clear? Similarly, when we are paying this money back to the public or the bank, this is again our cash outflow. So this is what we discussed in the last lecture. Clear? So you can make this table form also. Clear, friends? we are in need of finance, we need 4 crore rupees, then how we can manage those 4 crore rupees? We can take it through share capital. We issue the shares, we issue the documents, we issue the receipts to the public, and they will give you the money. Clear? Why people are interested in investing your business? Because your business is doing very good, and people really hope that in future also your business will be doing good and you will earn good profits. And out of the profits, these dividends are based on profits. Higher the profits, higher will be the dividend, and lower the profits, lower will be the dividend. So if your business is doing good and earning good profits, that means people will get higher amount of return on their amount invested. For the people, this is their investment in share capital. Clear? So you can write this down. Now we will move to some practical problems on cash flow from financing activities. Clear? Let's do it. Let's see the first practical problem. From the following information, calculate cash flow from financing activities. We are given the information as at 31st March 2015 and 31st March 2016. Equity share capital was 4 lakhs. Opening was 4 lakhs and closing is 5 lakhs. Right? 10% debentures. Opening were 1,50,000, closing are 1 lakh. Securities premium reserve. Earlier it was 40,000 and then it is 50,000. Bank overdraft. Bank overdraft is loan from bank. Clear? It was 1,50,000, now it is 2 lakh. Interest on bank overdraft. Last year the interest paid was 10,000. This year the interest paid was 15,000. Clear? Additional information, interest paid on debentures rupees 10,000. Now shall we start with equity share capital? Okay. Let's start doing the question. Right? I'll say cash flow from financing activities. Clear? The first thing is equity share capital. If you see, the opening balance of equity share capital is 4 lakh, the closing balance is 5 lakhs. That means during the year we have raised equity share capital of 1 lakh. Right? Documents, receipts amounting to 1 lakh we have issued to the public, and we have taken money from the public amounting to 1 lakh. So I can say issue of shares. Now this is a cash inflow for us because money is coming into the pocket. So 1 lakh. Second is 10% debentures. Opening balance of debentures is 1,50,000, closing balance is 1 lakh. Our debentures have reduced, that means we have paid back the amount to the people, right, to the extent of 50,000. Redemption of debentures. How much? 50,000. This is cash outflow. We are paying back the money to people. Earlier our debentures were 1,50,000. We borrowed 1,50,000 from public, but now we have 1 lakh. That means we have paid them back 50,000. Securities premium reserve. Now what is this securities premium reserve? This securities premium reserve is the premium amount on which the share capital is issued. Securities premium reserve is the premium reflects the premium amount at which the securities have been issued. The premium amount we set aside as reserve in the securities premium reserve account. So last year the securities premium was 40,000, but now the securities premium is 50,000. That means your premium has increased by 10,000. Why? Because you have raised equity share capital of 1 lakh. On that 1 lakh, that means you have issued the shares at a premium of 10,000. Clear? If your securities premium reserve has increased, that means whatever share capital you have issued it at a premium. That instead of 1 lakh, you have got 1 lakh 10,000. Right? So your securities premium reserve is increasing. That means money is coming to you 10,000. Clear? Next, bank overdraft, loan from bank. Earlier it was 1,50,000. Now it is 2 lakhs. That means our loan has increased. We have taken more loan to the extent of 50,000. So we call it as bank overdraft. How much? 50,000 cash inflow. Clear? Then interest on bank overdraft. Earlier, last year the interest paid was 10,000. This year the interest paid is 15,000. Right? Interest paid on bank overdraft, that is 15,000. Clear? We are given the additional information also that interest paid on debentures is 10,000. Interest paid on debentures, this is 10,000. Clear? So what is the net amount? This is the net cash flow from financing activities. Clear? What is this amount? This comes to 85,000 positive. Clear? So this is how we do cash flow from financing activities. Issue of shares, redemption of debentures is the cash outflow. Securities premium reserve is the amount of premium that we charge on issue of shares. Right? You can write this down as a note. Securities premium reserve, securities premium reserve reflect the amount of premium charged on issue of capital. Right, this includes shares, preference shares. Clear? So this is securities premium reserve. Clear, friends? So let's do more practical problems. See, XYZ Limited provides following information. Calculate cash flow from financing activities. Equity share capital, 10% debentures and 8% debentures. Now what is the meaning of 10% debentures and 8% debentures? 10% and 8% reflect the amount of interest, rate of interest that is to be paid to the public from whom we have taken the money. Right? 10 and 8% is the rate of interest. Clear? Additional information is interest paid on debentures rupees 10,000, dividend paid rupees 50,000. During the year 2015-16, XYZ Limited issued bonus shares in the ratio of 2:1 by capitalizing reserve. Now this is an important point regarding bonus shares, right? So what are bonus shares? If I talk of bonus shares, what are the bonus shares? During the sales, you must have heard about, in the sales, you must have seen the advertisements. You go to the shop, they tell you if you buy 2 things, you will get 1 free. Isn't it? Buy 2, get 1 free. Buy 2, get 1 free. This 1 free is bonus share. That means if you are holding 2 shares, then you will get 1 share free of cost. That means you will not pay anything for buying that 1 extra share. Bonus share is free of cost. Buy 2, get 1 free. If you are holding 2 shares, get 1 share free of cost. Clear? This 1 share free of cost is bonus share. Now, if we are issuing the bonus share free of cost, are we charging anything from the public? No, it is free. We are giving them free. Isn't it? So, does this issue of bonus share involve any cash inflow? There is no cash inflow. Money is not coming into our pocket. So issue of bonus share involves no cash inflow. Right? This will increase our share capital, but there is no actual cash inflow. We are just issuing the bonus shares. This will increase our share capital, no doubt. But this is not the actual cash inflow. Clear? So if you see the question, your share capital has increased from 10 lakh to 15 lakhs. How this has increased? If you say for every 2 share, 1 share is to be issued, 50% is to be issued as bonus shares. So on the 10 lakh, if we talk about bonus shares, our bonus shares is 5 lakhs. So on 10 lakhs, you have issued bonus shares of 5 lakhs and your share capital is 15 lakhs. Sir, why this amount is increasing? Sir, it is increasing because ultimately when that person will come with the document to ask for their money, you are entitled to pay him 15 lakhs and not 10 lakhs. Clear? You have issued them 2 shares. Now you are issuing them 1 bonus share free of cost. Money is not coming into your pocket. But when that person will come with the share document, you are entitled to pay him amount of 3 shares. 2 plus 1, 3 shares. So that's why our capital has increased from 10 lakh to 15 lakhs. It reflects the amount that is payable to the public on the basis of share documents. Clear? So this equity share capital that has increased 5 lakhs is all because of bonus shares. But as I told you that bonus shares involves no actual cash inflow. These are free of cost. So we will not consider them while preparing cash flow from financing activities. Clear, friends? Now, next item, 10% debentures. First, write regarding the bonus shares. You may write no cash inflow. So, not to be considered. Not to be considered in cash flow from financing activities. Clear? Now, next, 10% debentures. 10% debentures are issued. The opening balance of 10% debentures is 2 lakh. The closing balance is 0. That means we have paid back these 10% debentures. The whole of debentures we have redeemed, and there is interest paid on debentures 10,000. Okay, first let's start with cash flow from financing activities. Clear? Equity share capital, given there is an increase in equity share capital, we will not consider, because this increase is because of bonus shares. Bonus shares do not include any, do not lead to any cash inflow, actual cash inflow. So we are not to consider it while preparing the cash flow from financing activities. Clear? Then 10% debentures, we have redeemed all the debentures, that is 1 lakh. We have paid back them money, so we have redemption of 10% debentures. This is 1 lakh. And 8% debentures, that means we redeemed debentures carrying a higher rate of interest and we issued debentures carrying a lower rate of interest, 2 lakh rupees, because earlier 8% debentures were 0. Now 2 lakh, that means during the year we have issued 8% debentures to the extent of 2 lakh. Issue of 8% debentures. How much? 2 lakh. Clear? Now you are given interest paid on debentures is 10,000 and dividend paid is 50,000. So this is a cash inflow. Interest paid on debentures is 10,000 and dividend paid on shares is 50,000. So these both are cash outflows. Anything else? Bonus shares we have treated. So this is our cash net cash flow from financing activities. Clear? What is this net cash outflow? This comes to 1,60,000. Right? So the important point here was the bonus shares. Otherwise this question was very simple. Right? The important point was only bonus shares. Bonus shares are issued free of cost, so they do not involve any cash inflow. Then you might say, why our capital is increasing from 10 lakh to 15,000? Because that reflects the amount that is payable to the public. We have to now pay them 15 lakh now, not 10 lakh. You issued 2 shares to public. You issued 2 shares to a person and then 1 bonus share. He is holding 3 shares now. When he will come back to you to ask for his money, you will pay him for 3 shares and not 2 shares. But you charged him for 2 shares. Clear? So this is how we do cash flow from financing activities. This is very simple. You just need to remember this chart that I prepared in the very beginning. Just remember this much. If you remember this flow, then cash flow from financing activities is very, very simple. Clear, friends? So if you have any queries, send me an email at ksjteaching@gmail.com, right? You can send me the pic of a question. If you are finding any question difficult, I'll send you the solution. Clear? Now, in the next lecture, what we are going to do in the next lecture? We're going to do practical problems involving all three activities now. Right? Now we'll do the practical problems where we will prepare the whole cash flow statement involving all the three activities, and then we will find out the net cash inflow or outflow. Clear? Till now we were doing individual activities. Now we will do practical problems involving all the three activities and find out the net cash flow. Clear? So that's all for this lecture, friends. Thank you so much.